about. But first up, let's kickstart the show by bringing you a conversation on the market. Let me invite Unmesh Sharma, who's head of institutional equities at HDFC Securities, to take some questions now. Unmesh, it's always a pleasure having you on the show, so thank you for joining us. I just want to talk to you about some themes which have been doing very well in this market. So this entire real estate pack has been moving very well, right? Especially after the Q2 updates came through, and they're looking very solid. So do you think that after the kind of run-up that we've seen in these stocks, there's still lots more to go? How would you approach it? And also, in relation to the real estate pack, do you like any of the building materials, the paint companies, any of that you would look at?
Yeah, so that's one of the themes that we really like here at HDFC Securities. This whole build-out which is happening. I've had the opportunity to cover real estate myself when I was an analyst back in the day. And what we have noticed is that this usually tends to be a multi-year cycle. In fact, it tends to go over multiple economic cycles. As of right now, in fact, it's quite exciting to see that so far, the only surprises are coming from the volume side. And this is typically the precursor to when the second round starts, which is when the pricing action starts to come through. That's not even come through. So we believe on real estate, there is a multi-year cycle playing out. I think there is the way to do that is one, you look at companies where leverage will come off in the first part of the cycle. You also look at residential because that's where the strength is. And if you look at our model portfolio at this point in time, we have the largest overweight position on Sobha. Apart from that, we believe that this can be played, along with other domestic sector, which is on the infra side, where we are very positive. So if you look at our model portfolio and you combine cement and building materials together, we have some overweight positions there as well. Dalmia is there, Somani Ceramics is there. So very, very excited about the space. We believe it ticks all the boxes. It's domestic. The tailwinds are very strong, and there are multiple drivers of growth.
Unmesh, just zeroing in on real estate for a little while now, is this the first addition of a real estate company, Sobha, in your model portfolio, or you always had exposure to real estate and you've decided to increase it? Because this real estate upcycle has been ongoing for the last 18 months, 2 years now. And why Sobha in particular? Because all of them appear to be doing well. DLF's, sales are rocking. Prestige is, taking big strides in expanding to other metro cities. So why Sobha in particular?
Yeah, so look, our model portfolio works on the Nifty, and in real estate, obviously there is no stock in the Nifty at this point in time. So whenever we do take a position in real estate, it has to be off benchmark, which is to say that conviction has to be very high. We've had DLF in the past. We continue to remain positive on DLF, but at the same point in time, and since you asked the specific question, and amongst the players in Bangalore, we do have a positive view on Prestige as well. Having said that, there are three specific reasons why Sobha comes through. One is relative underperformance. Of course, the stock's up around 30%. But at the same point in time, I think there are 2 or 3 things which are playing out. There were some issues around news flow, on overseas subsidiaries, as well as some of the, something on the tax side. We believe that is behind us. The second is that the way we look at this is on a relative basis, the most important driver of these stocks is pre-sales. So on an EV per pre-sales, this stock tends to, is looking good if you compare it to all its peers. And most importantly, if you look at its leverage position and, real estate, residential especially, tends to be driven by triggers around uptake in pre-sales, which means launches have to be strong. So if you look at the launch pipeline for Sobha, over the next 2 years, and its debt position, the biggest leverage which can, biggest delta that you can come across the companies is going to be from Sobha. So which is why we have it in there. It's a 2.5% weight. So, our research team has taken a big call on this one in the index.
Okay, got that. That is on Sobha. Unmesh, are there any other pockets that you feel, in spite of the fact that they've run up a lot, you think that you would still be comfortable getting in? Because like you said, real estate is a very long cycle and perhaps it still makes sense to get in. Do you think you have similar views on, say, defense, on railways, on the shipbuilders? Would you look at any of that?
Yeah, so look, the question is a good one because everything has gone up. Interestingly, if you look at our style in general is we do have a value bias, and what we've seen is that now the way to play this across sectors is to have individual stock specific situations. If you look at our model portfolios, the way it is constructed is that we have mostly 100 to 200 pips overweight or underweight. So it's not that much there. But what happens is on the individual stocks, we can see pockets. Now, specifically, if you look at we combine IT and market infrastructure and exchanges kind of together. So one pocket where we are quite positive is on the exchanges, and there are two positions that we have recently introduced. And we have very high conviction. All of these, we have written deep dive notes as well. Our analyst Amit Chandra and Varun, who's the head of research, has been writing about this. One is BSE, where we think that there is going to be a market share gain story, again, a multi-year story which is playing out. And the other is MCX, where the transition happened, in fact, interestingly today. So very topical in that sense. These are the two names. So have they run up? Answer is yes. Can they run up further? Answer is absolutely yes. The way to play a market where the market itself is on almost 20 times is to basically look at where we have very high confidence on earnings delivery, and these are the two names specifically where we believe one, we are playing the emerging trend of people participating in markets, the specific difference that increasing contribution of futures and options, especially the options, and the third being the companies are still in that sense going to deliver earnings, and hence the multiples will continue to expand.
Unmesh, as the head of institutional equities, you're also in charge of sales and trading. Can you tell us the mood amongst your clients right now as you pitch these ideas? Because there will be a lot of pushback regarding valuations, the stocks have run up. So just walk us through what the client feedback has been on India, particularly mid-cap, small caps, the themes that they're most interested in right now in India.
Yeah, so look, I think there is a very clear difference in the way in which is the domicile of the money which is making a big difference. One is if you look at portfolio managers who have the option of being outside the country, there is a distinct discomfort on the valuation. The issue, however, remains that, and globally what's happening is if you look at a lot of the large asset allocators are thinking about moving more money to debt. And as a result of that, one is that we are in a little bit of a risk off. There is also emerging risks, while we believe that this whole conflict in both Russia as well as in Israel is more localized, but at the same point in time, there is emerging risk on that front, especially on the commodity prices. And India tends to generally underperform when oil prices, especially, and other commodities go up. So there is a bit of risk off. We are seeing some selling happening there, but at the same point in time, incrementally, that is also started to slow. What that tends to do, however, is that because it's a big, they look for high liquidity stocks, that is putting pressure on the banks, or rather more broadly the financials, as somewhat on the consumer, on which we anyways are underweight, and then a little bit on the IT space. The counter to that is that if you, we also have a very large retail operation, right, in HDFC Securities. While I had only institutional, what we are seeing is that the flows on that side continue to remain strong. There has been a bit of skepticism on the rally after 19,000. So there is a bit of money on the sidelines as well. So broadly, what is happening, what that leads to do is that now that we have had let's say a slight correction from over 20,000 now down to 19.5, that some of the money on the sideline is coming through. As far as pushback is concerned, everyone kind of pushes back on valuation, but I think the emerging view very clearly is that there is no very sharp correction in the market because we can't see the global markets coming off a cliff. Similarly, India kind of in that sense tends to stand out because while valuations are high, the domestic vulnerability, as in external vulnerability, is low. And on top of that, there are companies which are delivering numbers. So the clear view which is coming out is that valuations will hold in the small and mid-cap space because domestic flows are good, especially for companies which will continue to deliver on earnings. So I think at this point in time, bottom-up stock picking has to be done in the context of where earnings will come through and where they will continue to remain strong and not disappoint. And which is what the basis of how we have built our model portfolio as well.
All right, Unmesh, very interesting chat with you as always. We do hope to have you back on the show so we can discuss some more of your ideas. That is Unmesh Sharma. By the way, their recent additions, like we were talking about, and he was just detailing to us, they have Sobha, they have MCX as well as BSC. But with that, it is time for a short